Are you looking to invest in property, but you're not sure whether to start with apartments or houses? In this video, I'm going to share with you the differences of apartments and houses and what they have in common, as well as profit you make for each of these type of investment properties. What I'm about to share with you with these two type of properties would make you serious return on investment. Not just that, it also identify what sort of property you may want to be investing in. Hey guys, my name is Rahim. Welcome back to my channel. If you're new here, smash the subscribe button because I talk about property investment, personal development, and how to gain financial freedom. What I'm about to share with you would help you become a property millionaire with acquiring or buying the right sort of properties. Here's the thing, before we get going, I would like to tell you both investment properties are good investment. But if you are looking to make your money work a bit harder for you, it is important for you to understand what these two type of properties have in common and what distinguish them and what sort of return would you get if you were to invest in these two type of properties. It's very important for you to know this because this is what helps you understand what your return on investment is. In this video, I'm going to share with you step by step what these two type of properties have in common, what are the differences, what are the cost involved, and what sort of profit you can make in each type of properties, and obviously give you my own opinion of what I think about the two type of investment properties. So let's get to understand what are the differences and the common among these two sorts of properties. So the first thing I like us to look at is the type of property. Obviously we have an apartment. Apartment is a residential unit that is within a building. Okay, it could be a purpose-built apartment building, or it could be a property that have been converted into different apartment, i.e. a normal residential property that have been converted into different individual apartment. But what I'm mainly going to discuss here today is the differences between purpose-built apartment and actual houses, i.e. semi-detached or terrace houses. Mainly I'll look at semi-detached houses versus apartments. So the first difference between apartment and houses is apartment are leasehold properties. So what do I mean by that? What I mean by that is the apartment itself sits on a land that is owned by someone else, and that person is called a freeholder. So in essence, you only kind of own the apartment, you do not own the ground where the apartment sits on. Hence the reason why they call the property owners that own apartments leaseholders. So in essence, you only own the square footage within the building itself. Whereas if we're looking at houses, most houses are freehold houses. Freehold houses is the houses where the investor owns the land as well as own the property that sits on the land. So in essence, they have full control of that property and they can do whatever they want to do with that property without any consultation to the freeholder also, because they are the freeholder and the owner of the property. So in essence, apartment is a leasehold and houses are freehold. Next, if you've got an apartment, because it's owned by the freeholder would employ a management company to manage the whole building, because you may have 5, 6, 7, some instances even 20 apartments in one building. So therefore the freeholder would employ a management agent, and those management agents looks after the whole building, from the landscaping, from the lights, the common, the lift, everything they look after. So as a result of them doing that, within that building, they charge you something that we call service charge. The service charge is what they charge you for looking after the whole building. So in essence, each leaseholder within that building would have to pay service charge. Whereas if you own the property yourself, suppose you bought a terrace house, a semi-detached house that is a freehold house, you do not pay service charges because obviously you own the whole thing and literally you manage the whole thing. So in essence, that is not an additional cost if you were to buy a freehold house. Number 3, ground rent. Now, this is important. If you own an apartment, you also pay ground rent. You pay the ground rent to the freehold. You may be thinking, what is ground rent? Ground rent is the rent you pay for having your apartment sat on the land where the building is built. And that amount is paid to the freeholder, the owner of the land where the property sat. Again, it's something that you pay on a monthly basis, quarterly basis, half-yearly basis, or in a yearly basis. It depends what sort of freeholder agreement you've got with the freeholder. Now, looking at freehold houses, you do not pay ground rent simply because you own the whole building. You are the freeholder, you are the owner of everything. So therefore, you are not liable to pay any ground rents to anybody because you are the ultimate owner of the properties. Next, lease years diminishes. So let me tell you a bit about what lease years here. So if you were to buy an apartment, in most cases the apartment come with a leasehold years, meaning you are going to be able to stay in that property for certain amount of years without being evicted, sort of. Okay, that gives you the length of time you can stay in the property. So lease years starts from 50 to 1,000 years. In most cases, they are 99 years. So in essence, if you've bought a property that have, let's say, 50 or 60 years lease on it, the lease years diminishes as you stay in the property, right? Every year gone reduces the number of years you have remaining in that property, in essence, in that apartment. So you may be thinking, why should you worry about that? You should worry about that for a few reasons. One, the main reason is when it comes to remortgaging your property or selling the property on, or maybe you want to revalue the property. Suppose you want to revalue the property and the lease years are, say, less than 50 years, you may struggle to get higher value for the apartment. Or perhaps you want to remortgage. If you are going to remortgage the property, the bank will do exactly the same thing. They would want to revalue the property. So if they are going to revalue the property and they realize you've only got 50 years left in the lease, you may be thinking, whoa, that's lots of years. It is lots of years, but it's not in the investment point of view. An investment point of view, that's not lots of years. So you tend to get a restriction on the people that will lend you or mortgage that sort of properties, because the banks are looking anywhere between 70 to 99 years to protect their investments. So in essence, the longer you stay in the property, the less lease years you have. In essence, your lease year diminishes as you stay in the property. Now, if you have a freehold house, that is not applicable at all. You don't have to worry about your lease year diminishes and all that sort of thing. And then obviously you haven't got to worry about that because you own the property outright. You've got no leasehold to come after you. Next difference. If you've got an apartment and you require, maybe you want to refurbish the apartment, or maybe you want to do a bit of work in the apartment. In most cases, you need a permission from the freeholder to allow you to do that. So without the permission to renovate that flat, you are not allowed, you're not legally allowed to renovate that property. If you get caught, you're gonna get fined, maybe evicted and all that sort of thing. So perhaps you want to inform your freeholder before you do any works there. And here's the thing, anytime you made an inquiry or you needed permission, the freeholder is likely to charge you administration cost and all that sort of thing. So in essence, then you'd have to pay for whatever conversation you're having with your freeholder. Next, if you have a house that is a freehold, that is not a problem. You don't have to seek permission to anybody else to do your internal work in your property. You can wake up in the morning, renovate your whole house. You don't need to ask permission to anybody because it's yours. You don't need to ask for permission from anybody. That's another difference between a cat apartment and leasehold. Next, restrictions. Most apartment has restriction on them. Some of them may not allow you to do short-term let. What is short-term let? If you were to buy an apartment because you want to do, say, serviced accommodation, people call it Airbnb, you may not be able to do it there because the freeholder doesn't allow short-term let in that building. Suppose you bought that property without reading the fine print, and then only for you to realize you're not allowed to do service accommodation in that property. That investment then become an investment that may not give you the return you anticipated or forecasted to get from that investment. So it's important for you to read the fine print to understand if that specific building allows you to do serviced accommodation. In contrast to freehold houses, you do not need any permission and there's no restriction for you to do a serviced accommodation in that property, unless if the council or whatever is going on around your investment area restrict serviced accommodation. But if it is to do with the building or the property itself, there is no restriction. You can wake up in the morning, decide to do it as a serviced accommodation. You can do it as serviced accommodation, no questions asked. Now, when it comes to apartment, suppose you've got a 3-bedroom apartment. You've got that 3-bedroom apartment, might be a rectangular or a square apartment, whatever that may be for you. If you've got that apartment, you cannot extend it, right? Because you are constrained to the square footage. Okay, you cannot go upwards, you cannot go sideways because there's another apartment next door. You cannot go on the other side because there's another apartment next door, and you cannot go at the back because obviously there is no ground at the back. So in essence, you're restricted to that space, right? You cannot extend the apartment to make it a 4 or 5 bedroom apartment because of the amount of space you have in that apartment. In contrast to freehold houses, of course you can extend it. You can basically go through the loft if you have enough roof height. You can go through the back, the rear of the property. You can have a conservatory, you can extend it. You can go sideways also to extend it on that side. So in essence, with a house, a freehold house, you can manipulate the value of the property. You can buy a 2-bedroom house, you can convert that into a 3-bedroom or 4-bedroom property and force the value of that house up without even literally getting any permission from anybody else. Unless if you're doing outside of the property, you're changing the look of it, maybe you need the council to give you a permission. But that is to do with any property or any building within the UK. It's not something strange. But when it comes to an apartment, you need to seek a freeholder consent, and in essence, you are restricted on the space anyways. You cannot add any extra room or maybe additional 2 or 3 bedrooms, whereas in a house, you can go from 2 to 3, 4, 5, and you can even change it to a HMO property or perhaps convert it into apartment as well. That's the flexibility when it comes to houses. You can manipulate the figures and do whatever you want to do with the property, subject to planning obviously, but you haven't got that restricted of space if you ever want to do it and if there's a room to do so. Next, with apartments, you tend to get less capital appreciation. Let me explain. Suppose you bought a property that had, let's say, 60 years lease on it, okay? And then you've stayed in that property for, say, let's say 10 years. So your lease years is at 50 years. So if it is a 50 years, the value of that apartment, instead of going up, it will be going down because the lease years has diminished by 10 years. As a result, the value of your apartment tend to go down because obviously there's not lots of lease years left in the apartment itself. Now let's look at houses. When it comes to houses, capital appreciation plays a vital role, and you tend to get capital appreciation as well. Why? Because one, you own the property. Second, it's not a leasehold property, it's a freehold property. So there's no restriction on years in it. You can own it, you can inherit it from your parent, your children can inherit the property from you. It never ends because obviously it's a freehold. As a result, your property price tends to go up gradually. And currently, as I do this video right now, the average increase in property prices is between 8 to 15% a year, and that has been going on for the past 80 years. So in essence, your property value would be going up as time goes on. Next, if it comes to apartment, as we've already talked about it, it's more running cost. You've got your service charges, you have your management fees to pay to the people that look in the whole building. You have your ground rent to pay. So basically there are more costs associated to an apartment versus a house. So if you own the house, obviously you've got less expenses. You don't have to pay service charge, you don't have to pay ground rent, you don't have any other contribution to make towards fixing the lift and all that sort of thing. So basically because you own the property and it's yours and it is freehold. Obviously, if it's an apartment, as a result of more running cost or higher running cost, it means you get less profit versus houses. Because you've got less running cost, you tend to get more profit. So these are the differences between an apartment and a house. So what I'd like us to do now is to do a real life research to show the differences and the cost associated to apartment versus houses, and to clarify, because numbers don't lie, to show how much profit each of these properties will generate us. Let's get to it. So we've got the rental income here. Fantastic. We've got all these expenses here. So what we're going to do, we're going to look for a 3-bedroom apartment and also a 3-bedroom house. We're not going to go for the most expensive houses, and we're also not going to go for the most expensive apartment. We want it to be fair to both assets, to ensure that we're looking to compare like for like. Okay, so as everybody would do if they were to look for a property in the UK, they go to a platform called Rightmove. So when we go to Rightmove, this dialog box come up. So what we're now going to do, let's just look at a place in London. Let's look at Croydon, for example. I love Croydon. So if we go to Croydon, I'm being a bit biased here, is because I grew up in Croydon, okay? So let's do Croydon. Let's say 3-bedroom, maximum three bedroom. We're not gonna select the type of property. We're gonna include let agreed. So we're gonna then get this result page. As I said to you previously, we want to ensure we are fair. We're not gonna go for more expensive apartment. We're gonna go for the mid-range apartment that we think it is kind of okay, right? So if we keep looking here, okay, we got one there for 2,000, that's okay. We've got there for 1,800. We've got this one here for 2,100, okay? Actually, let me filter it first. So if I filter this to apartment first, so we only get apartments, okay? So we're not gonna go for the wonky one. We're gonna go for the one that is okay-ish, okay? So we keep going here. We keep going. This one. This is what lots of people will kind of rent, okay? Let's say then we're gonna go for this one. So this one is renting currently in Croydon for £2,100. So let's put £2,100, okay? Now we're gonna look for houses. So if we're looking for houses, because we want to be fair, let's look at a semi-detached house, okay? So again, we want to be fair here. We don't want to go for the most expensive ones. Let's go for this one. This one is already let. Anyways, this one's already rented. So let's go for this one at £2,150. So you're gonna put £2,150 here. So that gives us our rental incomes for both apartments. Okay, moving on. Now, I don't also want to just pick a figure round, a random figure and give to you. So what I like us to do is also to search how much properties are sold in Croydon so we can get the average property price in Croydon, and we use that as a ballpark figure. Okay, so moving on, we're gonna go here. Okay, we're gonna type Croydon. Okay, we hit Croydon. Okay, and then we want Croydon, London Borough, because that's where we're at, and let's just choose Croydon house prices. So once we choose Croydon house prices, it brings up the average house price and how much all these houses are sold or apartments are sold in Croydon. Okay, so you can see here properties in Croydon had an overall average price of £395,000 over the last year. So we're gonna take that property price. Okay, so we've got the average house price. So what we're now going to do is to work out how much interest we are going to pay should we get a mortgage to buy these properties. Okay, so we're gonna do this. So we know we're buying the property at £395,000. The bank will lend us 75% of that amount. And then let's estimate our interest for that loan would be 4% a year. So we times that by 4%, and obviously we divide that by 12 to give us our monthly interest payment. That then gives us £987.50. So obviously we want to do it like for like. Okay, we paste that there. Okay, so if you own a property in the UK and you are an investor or a landlord, you employ an estate agency to manage the property itself. So because end of the day you want to be an investor perhaps, or even if you're a landlord, you want the property to work without you. So a going rate for management fees is about 10%. So if we put 10% of our gross rental income here, okay, that gives us £210 for the apartment, and then £215 for the house. Okay, repairs. Obviously, we may need repair and maintenance for both properties. Let's factor in 10% of our gross rental income. Okay, we put that here times 10%. I like to do 10% so that you've got enough money saved for whenever something goes wrong in the property, so you don't have to take out of your profit to fix the property. Next, now if you've got an apartment, you've got two types of repairs. Okay, the first repair is a normal repair in your property, let's say inside the property and all that sort of thing. Okay, and also you got another repair when it comes to apartment. Maybe the lift is not working, maybe there's something wrong somewhere. They're likely to ask you to contribute towards fixing the common area. Let's say that might cost you 5% of your gross rental income. Because you're clever, you want to put that money aside. Okay, you times that by 5%. Then obviously, if you own the property outright, you haven't got any other repairs to do apart from what you would normally do. And then let's say insurance. Let's say if insurance for both properties are £50 each. Now, service charge. Because you've got an apartment on a leasehold, you need to pay service charge. Again, I don't want to get these figures randomly. I'd like us to do a research to find out how much are the average service charges in London. Okay, so if we type here, average service charge in London. So the average service charge in London is £1,800 to £2,000. So we're not going to go for £2,000. Let's just stick to the £1,800. So what you're now going to do is to put the 1,800, you divide that by 12. That gives you minus £150. That's what you would have to pay every single month to the management agent. So if you got a house, you don't pay service charges because obviously you own the property and you don't need to pay anybody else to look after it apart from your management agent. Okay, and also if you have an apartment, there's something that we call ground rent. Remember the freeholder I told you about? The freeholder will charge you rent as a result of having your apartment sitting on their plot of land. Okay, let's look how much is that in London in average. So average ground rent in London is between 200 and 500 pounds per annum. Okay, that's how much you would pay per year. So with this one, let's just say half of it, right? We're not going to go 500 and we don't want to do 200 because we want to be a bit realistic here. Let's say it is half of the 500 a year. Let's say that would be 250 pounds divided by 12. That then gives you 20 pounds 83 pence every single month to pay towards your ground rent. So ground rent is usually paid quarterly, half a yearly, or yearly. Okay, this will depend or subject to the apartment you've bought. Okay, so if you have a house, you don't pay ground rent as you are the freeholder. Because we've got an apartment and our lease years will diminish, there will be at some point where we would need to extend our lease in order to get a mortgage, or in order to us to get a higher value of our apartment, or in order to be able to borrow against that property. So let's look again to see what's the average lease extension cost in London. Okay, so we put that there. Let's hit that. These are the costs associated for extending your lease in London. So lease extension premium is about 7,000 to 10,000 pounds a year. So obviously we're not going to go for 7,000 and we're not going to go for 8,000. Let's say perhaps it will cost about 8,000. Okay, so let's put 8,000 here. Okay, 8,000. Okay, and then they said here your surveyor valuation, obviously going to value the property as well. Let's say that was about 800 pounds. Okay, let's say 800 pounds. Plus, we also have solicitor fee. We're not going to go for 1,200. Let's just estimate that to be about 800 pounds. So we add another 800 pounds here. Plus, we also have our freeholder valuation. Okay, this is for them to value the land where the property sits. That would also cost you about 600 to 900 pounds. Let's just take 700 pounds for that as well. So you put 700 pounds here. So obviously we divide that by 15 years. Let's say probably you're gonna sit on the property for 15 years before you do any lease extension. That will sum up to 180 months. So we divide it by that. But obviously because you are a clever investor, basically you are going to be saving that money to ensure when it comes to doing it, you have money saved to allow you to get the extension done. Because if you don't, the freeholder may repossess the property from you. Okay, so looking at this now, for an apartment, if you add all these costs, your total expense is £1,790 versus if you're doing a house, your total expense is £1,467.50. Okay, so if we minus our expenses from our gross rental income, for an apartment we're making £309. Again, £309 is a good return on your investment. Looking at other alternative investment in the UK, maybe stock and shares, cryptos and all that sort of thing. This is steady recurring income. You get that £300 every single month. So it's a good investment looking at it that way. Okay, looking at alternative investment. But however, if you're looking at versus an other property, a freehold property, you are falling short here, because a freehold property generates £682.50 every single month versus an apartment that generates £309. So you can see basically you're making more return on your investment in houses versus apartment. Suppose then people are arguing, oh, apartment don't pay building insurance. So let's take the building insurance off. Okay, your apartment, the same apartment, only generates you £359.44. With the house, the freehold house, including the building insurance, that property still generates you £682.50. That is £323 more net profit than an apartment. So the choice here is absolutely obvious, isn't it? Because here's the thing, you can see the figures there. The figures don't lie. I like to analyze my deals. I get the figures to help me make my decision. So looking at these two options, I can clearly go for houses because of the various things I have indicated here, by obviously having full control of the property, not having to pay service charge, not having to pay ground rent, not having to seek permission to do stuff I'm doing in my property, not having to worry about extending my lease, all that stuff that goes with apartment. And most importantly, when it comes to houses, we can manipulate the figures by adding an extra bedroom, couple of bedrooms, changing the house from a 2-bed to 3-4 bed, changing the use to a HMO house in multiple occupation, where you can rent the property on a room by room basis instead of renting it as a whole house. There's so many advantages when it comes to buying freehold houses. You may be thinking that apartment is a bad investment. No, it's not a bad investment. It's just a different way of making your money work for you. Okay, it's still a good investment. You're making about £300, which is the going rate, to be honest. But when it comes to houses, you get better return on your investment. So it's still a good investment, right? Because you may actually even invest in apartment at a lower prices. They may be cheaper. But at the same time, when it comes to houses, so many advantages around it, okay? You don't have to worry when you pass away, the lease years diminishes, your children have to pay another £25,000 to £30,000 to extend the lease, because that's how much it almost costs. If you passed away, you don't have to worry about your kids paying £7,000 to £10,000 to extend leases and all the expenses that goes with it. So basically, if you've got a property, they can inherit it, they can do whatever they want to do with it. So personally, I love houses. I love houses so much that I will literally do whatever it takes to get a freehold house, because obviously it gives me better return on my investment, and obviously it gives me an idea of what I could do with the property in the future. So I hope this video has helped you understand the differences and the returns you make from investment properties if you were to buy an apartment or if you were to buy a house. So I really hope this session has been helpful. If you'd like to know how to invest in properties to make your money work a lot harder for you, I would like to invite you to a free consultation with one of my consultants to learn how we may be able to help you to invest in properties, to make property work for you instead of you working for it. Book you for free consultation to learn how we may be able to help you make your money work a lot harder for you. I really hope this video has been helpful. If this video has been helpful, don't forget to comment in the section below so I can understand your ideas. If you want me to share any other form of investment, anything to do with property, comment in the section below. Or perhaps you disagree with some of the things I said here. Let's get the debate going, or let me know how your investment journey is going. If you like this video or any of my videos, smash the like button below, subscribe to my channel for more amazing videos. I look forward to sharing the next one. Thank you.